Good afternoon everyone, welcome to Tuesday the 3rd. Welcome if you're just logging in for the US session. And well, finally yesterday we got some momentum, we got some direction, some consistent direction and a trend, and that trend was higher. Really across the board we had a return of risk appetite, which is just what we were looking for. A few weeks ago we were predicting these earnings to be positive and a general appreciation of where the economy is actually going. We thought that the fear in the market was overdone, but the timing of this was incredibly difficult. But finally yesterday we saw that move to the upside, and we broke some significant levels, not just in the E-mini S&P, but also in the euro-dollar and in oil. There was a appreciation of risk across the board. So let's have a look at what happened in the E-mini S&P. Well, here's yesterday, the beginning of August, and even though ISM fell from 55.5 to 55.5 from 56.2, it was still better than the economist forecast of 54.5, okay? And that really gave us this surge higher, and I've been talking a bit about this market being in a sideways range for some time, and how it needed to get its head and neck above the 1113 barrier. And that happened yesterday, and it's very good to see. This is the range that we've seen really since the middle of May, topping itself out apart from that one spike at that 1113 level. But very good to see us just getting above there. We've got our target for today that we would like to touch at 1124.50, and I think if we continue to move higher and get our neck above that line, then we can have some actual trend and momentum in place, and we're out of this doldrum range that we've been stuck in for a number of months. It wasn't only ISM that we had, we also had figures coming out of the UK. The pound went through the roof yesterday. All over really, actually, we've had some dollar weakening, and that's something that I'm going to come on to later. What have we had today already? Well, we've had Spanish consumer confidence that's come out 73.6 versus previous 65.9. Eurozone PPI 3% versus expected 3.1. But have a look at the euro, guys. Have a look at what's going on in this currency pair, the euro-dollar. Absolute one-way traffic here in the euro, and that's not just in the euro dollar. Let me show you the dollar yen, for example. Look at how the dollar's getting hit against the yen. Okay, we've got dollar weakening across the board, which will have its worries and concerns that I'll come to at the end of this presentation. But for the euro dollar, Andrea sent out his FX strategy at 10 to 7 a.m. this morning for you European traders. I've adjusted it now for you guys logging in for the US session, looking to join the trend long at 131.85, a stop at 131.40. I think if we look at a longer term chart, the pace of this rally in the value of the euro against the dollar can be appreciated. And really it's taking back, look at that for a V-shaped recovery in this currency pair. I don't know if you remember, we were talking about the Swiss bank intervention, and that was along the region of exactly where we are now here, actually providing it with support earlier on in the year. If you were looking at the euro and how it moved when the Swiss bank were intervening, we were getting some spikes. They might now be back on side finally. So in the E-mini S&P, we're looking to join the continuation, we're looking to join the trend long. These are the kind of markets we like. So we've got a long entry at 1113, that level that was resistance, we're expecting now to act as support. And a stop just below the high of the level that we saw yesterday as an area of resistance. What else is going on? Well, Northern Rock, guys, they beat expectations this morning. I think that's quite a significant sign of the recovery, obviously from a UK point of view specifically, that being the first bank to really head into trouble. But a very important point I'd like to make, guys, after a sizzling run for risky assets on Monday, and it really was a strong run for risky assets on Monday, including oil. Let's just get my oil chart up. Have a look at this momentum in oil. I mean, this is just eating dollars to the upside. $76. That was just on the 28th, so you know, you're talking just a few days ago. Okay, and we've now just went up and touched 82. So really incredible run. $6 just in a few days. I think showing the risk appetite back in the market at the moment. But whilst this has been going on, both in oil, euro dollar, and in stocks, have a look at what the Bund's done, guys. And in fact, the Bund has just spiked higher. Just as I'm speaking, the Bund has spiked higher again, 128.64. There's a huge amount of money flowing into government debt at the moment, and I think that's a concern, and it could also be a concern on the weakening dollar. Investors are flogging to bonds and yen. I just showed you the dollar yen. Let me get the yen back up again. So they're reading an FT report here. They're flowing into bonds and yen as stocks and commodities struggling to move past lingering doubts about the global economic recovery. As long as there are these lingering doubts in the back of investors' minds, and as long as the yen remains high relative to the dollar, as long as you continue to see bund action like this, I think you're going to have any upside very limited, guys. So do be careful. It was great for us to see that big push and a strong move yesterday. This move in government debt scares me, however. Let's just get that onto a daily. So we're moving back up to the upper end of the range of the bund. And these are all-time highs, guys. These are all-time contract highs. And this is whilst the stocks, if we have a look at what the stock markets have been doing over the last, well, certainly yesterday, but grinding over the last few days. You know, the stock's obviously quite far off their July lows. We have had a recovery, but that's not being reflected in either the yen or bonds at all. So, again, we've kind of got this divergence of economic outlooks. Certainly in the government bonds, they're saying that, you know, it's not over yet, there's still a long way to go. There's all these growth fears that are gnawing away at sentiment. Australia today kept interest rates on hold. Policy makers noting that easing in the global economy's growth rate is moderating inflation. Ben Bernanke, the Federal Reserve Chairman, highlighted the risk to the US economy, including a weakening state of local finances. You all know about the story in California. California are in real trouble. You know, his speech didn't cause the markets to sell off, but I think it will have acted as a cap to the upside. Okay, I mean, the factors to watch going forward, we've got a lot more data coming out this week, especially on Friday, obviously non-farm payrolls. And I think this market's just going to wait to see exactly how this plays out, okay? Whilst bonds remain so high, whilst the yen, money's flowing into the yen, it's going to cap any upside. We've also got woes on food prices, guys. So this July, we've had the fastest increase in wheat prices in 51 years. And this increase in commodity, in foodstuffs, in oil prices is all happening at a time when governments are printing more money. Well, the US anyway. This is all happening at a time where the US is continuing to stimulate its economy, and you could have a very dangerous inflationary situation. There's reports saying that the Fed could create a final crisis by continuing to print money whilst prices, such as food prices or commodity prices, continue to move higher. So, although we did have this push higher yesterday, and we do expect it to grind higher notwithstanding any shocks, I think there's a point of concern looking at government debt, looking at the safe asset. In fact, again, the bund having just moved higher to new highs. So do bear this in mind, guys. Today, what have we got out? Well, we've already had quite a few earnings, and again, these earnings, you know, looking good. Procter & Gamble, earnings per share, 71 versus 73, so that one just missing on the revenue side. But Pfizer is 62.